Thank you very much. It's a great pleasure to be here this morning and to moderate such a distinguished panel of speakers on this very important topic of transition finance. And I think the scale of the challenge and the urgency was very well highlighted by the previous speakers. And so it seems like it's our job to get down to business and work out what we're very practically going to do to get finance flowing where it needs to go. And so I'm really happy that we have here people that are working on this task, thinking top-down about how to make transition finance work. And we've got Vanessa at Havard-Williams, who's the chair of the UK's Transition Finance Market Review. We have some real economy representation from Fraser, Dobbie, who's the CFO of North Star Shipping, who can speak to us about the experience from the private sector of trying to transition. But we also have finance, and obviously that's largely why we're here. And we have Richard Tarboton, who's head of sustainability at Barclays, and also Wenjian Fang, who's the CEO of Bank of China, and so can bring some excellent international perspective. I'm Alice Carr, and I'm executive director at GFANS, which is also a UK invention, I must say, during the UK COP presidency. And we now convene 700 financial institutions globally that have individually made net zero commitments to transition in line with 1.5 degrees by 2050. And that means that there are a very large number of financial institutions around the world actively thinking about how to set targets, how to develop transition plans. We can see, we've been saying that we expect 250 transition plans to be voluntarily issued by the global financial sector over a year. I think we're roughly on track for that. We can see firms thinking very hard about how to allocate finance, but I'd like to use this panel to dig in and see what more we could do to get that finance to flow where it needs to go. And also to highlight some of the strengths and opportunities here in the UK, given all the work on transition planning, and I see Kate Levick's here in the audience. The UK has done lots of work to think about transition planning and how to implement that in the UK. We now have the Transition Finance Market Review. As mentioned, we're thinking innovatively about carbon markets and other types of financing. So how do we bring this all together and get the finance to move where we need it to go? So I'd like to start with Vanessa, who has been given the very important task of running the Transition Finance Market Review. Could you say a few words about the motivation for the work, but also you've already done the call for evidence, and I know you've got lots of responses. What sorts of themes are coming out of the work so far?
Well, first of all, thank you very much for having me. Lovely to see everybody here. And to come after Baroness Scotland was amazing. So the Transition Finance Market Review, or TFMR, because we love a four-letter acronym in this world. It's an independent market review. I'm chairing it, supported by a group of experts drawn from different parts of the market. And the homework question is really independently gathering evidence and analysing it to assess how the UK can establish itself as a global hub for high-integrity transition finance. So you said we published a call for evidence, and we did, and lots of lovely people responded, and responded very thoughtfully. So we got a lot of responses, and they were very high quality. We're in the process now of sifting through that evidence base, and we're also doing a whole lot of engagement. And over the summer, we will write up, I think. We asked in the call about people's thoughts on the framing of transition finance, what's in, what's out. And what's clear already is that many respondents feel that a bit more clarity would be helpful as to what is and isn't transition finance. And also, they endorsed our instinct that we needed to think beyond labelled finance. We've already talked about transition plans, but with the work that's already been done about transition plans, it looks like there is an opportunity to use transition plans and transition strategies at entity level to supplement what's already there in terms of taxonomies that are guiding on predominantly green, but also some transition activities at activity level. And we can also see value in the development and use of common principles, guiding principles for transition finance. I think it's also worth saying this isn't a one-shape-fits-all kind of a problem. And to scale finance into emerging markets and developing economies, we do need flexibility to develop approaches that are appropriate in the relevant market and responsive to social and economic needs of particular countries. And I think one should be respectful of that, as well as the long-term goals of the Paris Agreement.
Brilliant, thanks very much. And now I'd like to go to the opposite end of the spectrum and ask Fraser about your experience of running a company that's obviously looking for finance. It'd be interesting to hear how you're thinking about the transition, whether you've noticed any change in the way financing partners engage with you, whether they're more focused on your transition pathway and where you're going.
Sure, hi everyone. See, look, I think transition for a company like us, North Star is the UK's largest offshore support vessel company, so we've been working in the energy industry for 50 years plus. So transition for us is about two things. First off, it's about the opportunity that the offshore wind market creates. It's about the ability to expand our business and gradually rebalance the end markets that we work in away from hydrocarbons. So that's the opportunity side. The challenge side is about how do we decarbonize our own operations and move away from diesel as our primary fuel. I think if we think about the opportunity side, I mean, over the last 4 years, we've invested in 8 new assets. That's been $500 million of investment. We've been able to secure debt capital investment of about the same over that short period of time. In terms of the market for just ESSO, so we're in service operation vessels. These are vessels that are utilised for allowing turbine technicians to access the turbines in far from shore wind farms. So in that small niche of the market alone, we think there's been over $3 billion invested in just new tonnage since 2020. Another nearly $9 billion required to 2030. So, big numbers, significant investment, and huge opportunity for companies like us that have that track record of operating successfully in offshore marketplaces. On the challenge side, decarbonisation is got to be technology and innovation led, and that is where there's an interesting, competing objectives between technology, innovation, commercial viability, operational efficiency. Now, North Star isn't a technology company per se, but we are an integrator of technologies, and we work really, really closely with supply chain partners to try and help them to answer the questions that need to be answered to de-risk those technologies so that we can integrate them into our operations. When it comes to how the finance community has approached supporting us on that journey over the last 4 years, I think on the equity side, we were able to bring infrastructure private equity into the business in 2017. And at that point in time, we were entirely focused on oil and gas. But there was an opportunity and a pathway to potentially move into offshore wind. And at that stage, I think that was enough, that there was an opportunity. We then sold the business to Partners Group, who are our current shareholder, in 2022. And I don't think that would have been possible if we hadn't made the first steps along that journey to actually make that transition and secured our first contracts in offshore wind, made that first level investment. So I think equity still is supportive of a story and a journey, but it's very, very challenging. The first step now is very, very challenging. On the debt side, I think it's even more interesting. So if we think about, we've invested in 8 assets over that 3.5-year period. We see the most, and I think access to low-cost capital is so important for the offshore wind industry as a whole. The viability of these projects relies on project economics, and if they can't access debt all the way through the supply chain to build up these assets, then what we're going to see is constraint on capacity growth, which doesn't help with climate objectives at all. So what we found is that if you want to raise capital for a project, and that project is completely focused on renewable energy, well then there's finance there for that. But for us, We see it as a much more efficient means of financing our business to fund at a corporate level, to have secured capital that we can then deploy when we win tenders so that there's no financing risk associated with our tender participation. And to achieve that, we wanted to raise money at a corporate level, as I said. Now, we went out to raise money 2 years ago, our first corporate capex facility to support Win Growth, and it proved really, really difficult. And if it wasn't for the Scottish National Investment Bank, who are a development bank with that kind of transition focus, if they hadn't have stepped in, we could have stagnated, or we would have had to continue to go back to project finance market. Now, they were able to step in. We've been able to order further vessels, and we've just completed another raise of £225 million, but this time we've got 5 commercial bank lenders brought into the structure. So it kind of shows that the money's there, but that first phase is really, really challenging. And if you don't have access to some sort of development or transition finance, then it can be very difficult.
Yeah, really interesting. And so we've got the challenge that you can see a good opportunity as a business to transition, but you need to get going on that journey, and you need people to provide the early finance, which might be riskier, and also you need them to provide it at the corporate level so that you can kind of manage your position sensibly. And I think some of the issues that you're digging into, Vanessa, are very much in this space about how do we measure progress at the corporate level as well as in relation to particular instruments and so on. Turning to the financiers, so Wenjian, you're the CEO of Bank of China here in London. I'd be really interested to hear about your experience of trying to finance transition here and globally. What's working? Where do we need to pay more attention to get the finance moving?
Okay, thank you. And I'm pleased to add some Chinese perspective here. I think regarding Chinese banks in general, taking Bank of China as an example, what I can say in terms of transition financing is, in recent years, action, action, action. I think there's very clear. Chinese banks are still taking tremendous efforts in putting real actions, to support the transition of the economy. Just 4 areas, for example. One is Chinese banks, or Bank of China is very active in joining international initiative with this UN principle for responsible lending, or TCFD or TNFD, or supporting COP15, and also SMI, we mentioned here, Sustainable Markets Initiative, Bank of China, and the Chinese come out very active there. So we are keen to engage with international stakeholders, and keen to learn, and keen to follow international standards. That's one thing. The second area I want to mention is, I think transition finance and green finance in general has been integrated into the strategy of Chinese banks. I think whether it's business development strategy or risk management strategy or operational strategy. I think in China, Chinese government has identified strategic priority areas for all the banks. Green finance is one of it. So all the banks are working to implement that. And I think you have seen tremendous amount of lending going into the green area in recent years. The speed is amazing. So real lending are going into the economy. The third area I want to mention is regarding innovation and products. I think banks, we have launched a lot of new products to the market, to the customer, whether it's on the asset side, liability side, or for asset managers. So that's another thing. You can see a lot of new things happening in China. The last area of our practice is regarding actually talent pool building, because it's important to have continuous talents to support this area. For Bank of China, for example, actually we have a clear aim to produce around 10,000 green finance experts by the end of 2025. So we have a clear aim set for that. So these are a few things Chinese banks are doing in terms of real practice.
Great, thanks very much, very impressive. Richard, I know that you've been thinking in Barclays about transition finance. How do you identify the right opportunities and get finance to flow? It'd be really great if you could just tell us about your experience in trying to get finance to the emissions in support of transition plans and credible decarbonisation pathways.
Yeah, great. Well, it's good to be here, and it's interesting hearing the scale and direction being achieved in some key areas. We looked at this transition finance challenge, looking at today at the report of 6 trillion being needed to finance the transition per year. I keep seeing higher numbers every year of what's needed to achieve that challenge. And we needed to create a framework that enabled us to drive the activities that we undertake as a bank towards our clients to support their transition plans, to support them in executing on those transition plans. And whilst there were clear documents providing guidance from GFANS, from ICMA on transition finance, there isn't a clear common standard. There isn't a clear set of rules for the road, as we call it, that enables the scaling up that we think needs to happen. So we've created our own transition finance framework. You can see it on our website. We've made it available and transparent as to what we are financing into the transition. We've set a goal of $1 trillion between now and 2030 to finance towards transition activities. And we're learning all the time on how that can evolve. And we're keen to adopt a common standard if it gets produced, to evolve from our own standard to that. So we're hoping that'll be something that we can learn from. I guess the most important driver for us, though, as a bank is back in 2020, we set an ambition to be a net zero bank. And supporting that ambition, we looked at our biggest, most material areas of emissions. Our top 8 sectors all now have carbon reduction plans and targets to achieve by 2030. Each of those targets is fundamentally reliant on the clients that we service in our portfolios achieving a transition. We can't achieve our targets unless our clients transition. So we are going to have to finance their transition to achieve those targets. And therefore, an important lever of this is producing products that can provide that transition finance to our clients, without which we will fail to achieve those targets. So that's our key aim here, is to ultimately achieve that net zero transition, and transition finance is one of the key levers to it.
Great, and just to say, if people have any questions, I think there's a way to submit them, and I'll pick them up after this next round of interventions. So, I think very helpfully we've highlighted here that there's work going on in the UK to try and think about how we define transition finance, how we implement it. There's definitely a need, because we can hear that in the real economy, the experience of attracting finance to projects that will get your emissions down through time can be challenging. But we also know that finance is increasingly focused on sorting this challenge out. So it's kind of, how do we go from here, that I'd like to address in the next round of interventions. So we do in the UK have the benefit of a common framework for transition planning, and that is deliberately consistent with the GFANS framework, so that's a huge strength. And now we have this initiative around the TFMR trying to build out around transition finance. So Vanessa, I'd like to come back to you and just ask, and I know we've got an election coming up, and that sort of slightly puts some pause on some of the work, but how do you see, what would good look like from this work? Like, where do you hope to get to during the course of the year?
Well, transition finance seems to me, maybe it's just me, and maybe it's because I'm doing the review, but it seems to me that it's been building in importance over the last year. And the scale of what we have to do and the speed with which we have to do it is becoming, I think, more visible to everybody. And at the same time, while I think there is huge opportunity for collaboration between markets, there's also a competitive piece to this, that this is an area where the UK as a leading financial services market and professional services market can excel. And it's also an area where there are many others who are very active. China has been active for a long time and has had very significant success that we see. Singapore has been developing a whole series of different initiatives. There's work in Hong Kong. Europe is thinking about it. There is, of course, the IRA in the US. So this is a busy area. And I'm hoping that through the review, we will set a clear direction of travel for the evolution of transition finance and the transition finance market here, building on the great work that you've been doing, providing some clarity on objectives and key principles, and also generating a better understanding across all stakeholders that this is necessary and it's a valid part of the market. Going straight to green is relatively straightforward. Transition is a more complex issue to engage with, but it's super important. We can't get to where we need to get to without doing this. So we'll look to contextualize some of the specific barriers and the possible solutions to how we mobilize capital. We'll look for case studies. Fraser's example is brilliant. I'm going to steal that. And also talking about how we create an ecosystem. So there is a big bit around capacity building, which we need to engage with. And I think, you know, the UK is one of the largest financial centres in the world. Its thinking is always going to be relevant. I'm hopeful that leveraging what other markets are doing, looking at the core ingredients that we've got, the real strengths we've got in this market, I'm hopeful that as a market and as a world, we can focus less on talking about transition finance and actually getting on with it.
Great, and yeah, I think many of us would support some standardization in this area, as already has been mentioned. Fraser, obviously you started your journey before we all started building our infrastructure for transition planning, transition finance, but how does the next phase look for your company and your industry, and what sorts of things would you like to see the financial sector doing to better help you?
I think for us, because we've now taken such significant strides towards our transition journey, it's getting easier, and our need for capital comes the further along that business plan we move, which means that the business gets greener. Yep. and hopefully then gets easier to fund. But I think if we put ourselves in the shoes that we had 2 years ago, the real frustration from our perspective at that point in time was the disconnect between where operating capability sits and offshore expertise sits, and that's in companies that have been servicing the offshore oil and gas industry for a very long time. Yep. And then the capital that sits, or the capital that's focused on companies that have no exposure to that end market. And that's a really, really difficult first step to take, and that can stifle growth. It can therefore stifle transition. And with supply chain capacity being such a constraining factor on the future of the offshore wind industry, to me we should be doing everything we can to help those companies to make those steps. Yeah, so I just want to highlight 2 points from that. I think one is that we're not going to succeed unless we can go where the emissions are and help get them down. And we can't just simply grow green, and you're describing that very well. But also that it's an ecosystem challenge, and that there are people all along your supply chain that need support. And each business will look slightly different, but it's how it comes together at the system level that matters for transition. And so we need to be able to accommodate that in our frameworks. Wenjian, I know that you've been thinking about innovative financing solutions, and we've discussed before carbon markets and so on. It came up in the speeches beforehand. Like, what sorts of areas would you like to see focus on from here in terms of innovation in financing?
Okay, thank you. Yeah, innovation will be a continuous subject. I think in terms of products, I touched on it. I think I'm not going to elaborate more in terms of providing more lending products or bond. I think we have green lending and also green bonds. We have sustainable linked bonds as well in this market. Chinese banks, I think Bank of China, we issued the first green bond here, and since then I think Chinese banks has issued over 11 billion green bonds in this market, including blue bonds as well. So those are more products we need to support the market. But there are other areas that I think we need innovation. I think in terms of, for example, how do we use the new technology in driving the innovation in transition finance. We know we have blockchain. How do we leverage blockchain technology, artificial intelligence technology, to help us streamline process, improve efficiency, and enhance transparency in this area? That's one thing. And also, we need innovation how to integrate, I think, what we discussed earlier, ESG together. I think at the moment still not enough integration in these areas. I think there's a great call for that. And also, I think in terms of carbon market, that's an area we need innovation. How do we unify or integrate the markets, different carbon markets in the world? So there are a lot of things that we need to innovate on as we move forward.
Yeah, I would just echo that we've been making progress in the UK. We've seen the recent US announcement on carbon markets, but we need globally integrated markets if we're going to efficiently decarbonize, and there's still work to do there. Richard, Obviously, Barclays is working hard domestically to support clients and globally. What sorts of innovations do you think would do the most to kind of unlock finance for your clients, and where would you like people in this room to focus when they leave here today?
So in thinking about innovation, there's technological innovation of the actual infrastructure and activities, but there's also financial innovation in how we create the right ecosystem. And what we are seeing as one of the key challenges is the missing middle, where organizations who are looking for finance are either too small for large infrastructure funds or too big for venture capital, earlier stage investment. And in the middle is a chasm of difficult growth that's needed. And I think Fraser's example is very clear on that. So we've created a £500 million sustainable impact fund to help drive early stage capital into the marketplace. It needs to work alongside infrastructure funds like the UK Infrastructure Bank to enable the combination of those two things to come together. And that's where the innovation needs to come through. There's one example that's been a success story just in February this year of GeoPura hydrogen company that we've helped at the early stage last year to raise finance, and then again this year to raise 56 million through 30 million coming from the UK Infrastructure Bank and the remaining balance coming through Barclays, leading with a number of other investors to come into that. And I think the combination and the long-term certainty that is provided through public finance combined with scaling that up with private finance is where that innovation of blended finance really needs to get moving and scale up.
Yeah, and I think that's we just sort of put a pin in that as well, that we do need to find public-private financing solutions, not just for emerging markets where we know that there are some jurisdictions that will need some de-risking for finance to flow, but also in some of the solutions we're trying to drive here in the UK, particularly where there's like kind of early stage, slightly riskier technologies and so on. And I guess one of the strengths of the UK is that, you know, people in this room can come together and try and find those opportunities and support them. I have a couple of very important questions here, which I'm going to ask the panel. So I'll start with Vanessa. We have a question here about how could we well leverage the work of the Transition Finance Market Review at the international level. And that might be slightly unfair because obviously you still got to deliver a report here in the UK. But thinking ahead, what could we try to do with this important work to try and build that consistency that lets finance flow cross-border?
Well, I think actually one of the things I've been struck by in doing this work is the connections that we've made with other markets who are thinking very similar things, and some of them are ahead of us, and some of them are at the same stage, and some of them are a little bit behind. And I think you will see that there is opportunity to work at a global level, market to market, as well as institutions working through their own global networks and through trade associations. So I think actually that ability to work globally and to share what has worked, what hasn't worked, that will probably happen quite naturally as between markets.
Yeah, and certainly I would say our experience is that people are grappling with transition finance globally at this stage. And of course, different countries are on different pathways, so as long as we can accommodate those, the kind of broad buckets of transition finance that need to get allocated look pretty similar. But we also have another important question here, which somewhat relates to that, which is how do we, and we haven't really addressed that so far in this discussion, and welcome comments from anyone on the panel, how do we strike the right balance? Because I think what we're trying to do here is enable the flow of finance to projects that can help us get emissions down in future. But obviously that's, you know, measuring and judging which of those investment opportunities really are going to help us decarbonize and sorting those out versus the ones that aren't is quite tricky. So I don't know if anybody on the panel has something they'd like to say about how we get the right metrics and KPIs and how we avoid you know, inadvertently supporting greenwashing.
So I can just, I guess, put out the same point I said earlier about the need for common standards. I think those standards will protect and provide clarity around what should qualify for transition finance and what shouldn't. And I think that's really important so that we can all then operate in safe, the rules of the road type analogy as to how we should be financing this marketplace. I think when it comes to evaluating which projects are going to drive the biggest impact, there's a carbon metric definitely, but there's also, I think at the moment, a massive challenge across our global markets in not addressing the fundamental economics that are holding back transition finance. So even if we had a framework in place, even if we had these products and services in place, the fundamental challenge and constraint on this is that for transition activity to be financed, it has to be able to pay back and provide shareholder returns. And currently, in a number of sectors, it's not yet at the level it needs to be. We're seeing some good steps forward in resolving that imbalance in the carbon pricing and carbon border adjustment mechanism in Europe, the Inflation Reduction Act in the US, the Contracts for Difference in the UK are all helping to create a more level playing field. But there's still a massive imbalance which has to be addressed in order for us to get to the scale that we're talking.
And right on cue, I have a question here that is basically in the space of how, you know, just exactly as you're saying, how does our ability to get transition finance to flow depend on wider policy, wider government policy and economic policy, and dare I say, transition planning at the national level. So, you know, how far would that help all of you in your work if, you know, if governments were doing more to set out their pathways and make more policy in this space, just as you mentioned, to kind of make the economics stack up?
I think just give one example on the policy level or staying in China. I think, of course, the Chinese government has issued very clear national strategy on, you know, how to achieve 30-60 goal. Chinese central bank, for example, they issued very clear green credit, green finance guideline for all the commercial banks. And also what's very interesting is that actually they assess us at the end of the year how well the Chinese banks are doing in terms of implementing the green, you know, finance, you know, guideline or other things. So I can tell you that's very effective. So they give us scores, you know, regarding, you know, how well we are doing. So that's an effective, in a way, the Chinese central government is trying to encourage us to put it in practice. I don't know whether that answers.
Yeah, no, very helpful.
Go on.
Another example, I think China has got some very clear industrial policies which are helping to drive this. We've also been looking at Japan, which has set out a very clear set of policies which are not sustainable policies, they're industrial policies, going out long term as to how those industries, those hard to abate sectors are going to need to transition, what the technologies are, what the policies are that are needed, creating more certainty into the ecosystem around financing those activities. They've also, the Japan Climate Transition Bond has created, I think, a best practice example of what we can look to follow as something which has the alignment to ICMA and the Green Bond Initiative and creates the right long-term approach to combining R&D funding with decarbonisation and scaling up. So I think there are some good practice examples in China and in Japan that we can learn from.
Yeah,
just add one thing, I think, for those who are interested. Actually, a few days ago, probably May the 29th, Chinese government, State Council of China have issued their 24 to 25 plan, you know, a policy for the whole country regarding how each industry, how each sector should do in order to implement the government requirement and put those things. So there are very clear targets there for each industry, whether it's sector, steel, automobile. Yeah. So please, you can see that online. You can see a good example of how government's policy is supporting that.
I think when it comes to policy and the impact on the private sector, we're obviously one step removed, or a few steps removed from government. Where we see the confusion is actually the internal policies of the lenders themselves. You know, one lender will have a different view from what green credentials look like versus another. We've had situations where banks seem to change their policies over the course of a 3-month period when they're looking at a potential investment in us. So, you know, some ability to standardize that, or at least have clarity around, you know, what their internal strategy is, I think is so important, because without that, yeah, raising finance becomes a really challenging process when it doesn't need to be.
Yeah, and I think we're sort of at a turning point perhaps where governments are stepping up their national planning. They are developing pathways, which is helpful, and policies, but it's relatively nascent, and not all countries have done what Japan have done and China have done so far. We're seeing finance beginning to focus more on this issue, and I think it's right that at the minute there might be a diversity of appetites for different types of investments, because we're sort of slightly in flux and we're moving to a world where this sort of transition finance becomes more widely recognized. But we still lack standardization, and there I think that probably explains a few of the differences that you experience from lender to lender. I have a question here which pertains a bit to what we were just discussing around, like how far as financing partners you're looking at the decarbonization pathways, like how, if you're thinking of financing in a particular sector, what are you looking at? The sectoral pathways, the transition plan of the company, or more informal at this stage?
So one of the new approaches that we've introduced to enable us to assess each of our clients on their transition journey is a 5-category client transition framework. So it categorizes how our clients are maturing in their approach, whether they have a transition plan, is that transition plan credible and driving progress, and ultimately are they actually delivering on that plan and achieving the 1.5 degree carbon transition that we need to arrive at. So we've got a score from 5 being at the lowest level of introduction and just starting to measure carbon emissions, all the way up to 1 at the ultimate transition plan. And each of those levels requires a different approach to financing, and requires us to be able to provide the right service and support to where our client is on their transition journey. But our aim is ultimately to enable them to all move through those stages. And I think that's what's necessary, is not to just simply say we're not going to now do any finance to this group of companies, but it's to enable the change to move from that level 5 all the way to level 1 as rapidly as possible, is what our framework's trying to achieve.
I think that's one of the challenges, going back to the question about how do you ensure that you're financing the right things and not adding to carbon, that it's so dynamic. Like, we're trying to help companies along a journey, along a pathway, and each company will go on a slightly different pathway, although within a sector we may see common approaches. So I guess we've got just 3 minutes left, and we've had some great questions from the audience, so thanks very much for that. I just wanted to give each panelist a sort of final word, if I may, and just, like, there's lots of people here from public and private sector in the room, lots of people that are going to go away and go back to their desks and keep working on this important topic. So if you could just say something about, like, what you would like us all to focus on as we try to turn transition finance from something that's risen up the agenda very quickly, but is still a little bit too nebulous for us to kind of really get the finance to flow where it needs to go. Like, what would you ask people to focus on?
So for me, it was actually what Richard was saying about the funding gap at the moment. I think if we can find ways to de-risk some of these new areas, or new ways of doing similar things but in a different context, and we can layer de-risking solutions to reduce the cost of capital, that will really help. So that's the big challenge, I think. Because the other issues around standardization, you can kind of see how we're going to get there. And the other thing that I would flag is capacity and consistency building within organizations as well as across subsectors. There's a lot more to do there.
Richard.
So it's been a lot of common themes here: long-term certainty, creating a framework and a standard. I think those are all important. But I think one message I would want to leave people with is this ecosystem will only be successful if it incorporates justice within the framework for what we are trying to achieve. And we heard this from Right Honourable Patricia Scotland so eloquently, talking about how many communities and people are being left behind in this transition. And as these companies transition, as we help finance them, there will be a number of areas that people will find themselves in being left behind in this transition. That requires upskilling, requires a different and more holistic approach to incorporating the just transition into this plan.
Great, thanks very much. Fraser.
I think the only thing I would like to say is just it's encouraging to hear, particularly from Richard, that there's recognition that transition is a journey and that we don't get from a 5 to a 1 without investment. I think that's something that we need to remain very, very conscious of because, without finance, this transition isn't possible.
We are all in London. Given London is the international financial center, I wish everybody to continue to promote global collaboration. So put aside ideological, political differences, let's work together. Global collaboration is a key to this success.
Brilliant. Thanks very much. Thanks to the panel. I hope that was useful for the audience. Thank you.